Advanced Financial Accounting PowerPoint presentation. In this presentation, we will discuss threshold tests for segment reporting. Get ready to account with Advanced Financial Accounting. Threshold tests for segment reporting. Separate supplemental disclosures need to be made for separately reportable operating segments. So we've got these separately reportable operating segments. We have to then determine what type of reporting needs to be taking place for them. Determining if a segment needs separately reported information, there are three 10% quantitative rules FASB specifies. Separate disclosure is needed for any segment that meets at least one of the three tests that follow. So we have the segment, we got to think about, okay, do we need separate disclosure for this segment? And in order to determine that, we're going to use these three 10% tests. They only need to meet one of these tests in order for the separate disclosure to be necessary, that being 10% revenue test, 10% profit or loss test, and 10% assets tests. We're going to go into more detail on each of these tests now. So next slides will be focusing in on these three items. So we're going to start, of course, with the 10% revenue test. If an operating segment's revenue, including both external sales and intersegment sales or transfers, is 10% or more of total revenues from external sales plus intersegment transactions of all operating segments, then segment is separately reported and supplemental disclosures must be provided for it in the annual report. So that we have the 10% of revenue, basically top line, of course, on the income statement to determine if the segment is separately reportable. Then we have the 10% of profit and loss. So now the next test, now looking at the bottom line of the income statement as opposed to the top line. If the absolute value of the segment's profit or loss, so absolute value, so if we have a income or loss, is 10% or more of the higher in absolute value of A, the total profit of all operating segments that did not report a loss, or B, total loss of all operating segments that did report a loss, then the segment is separately reportable and supplementary disclosures must be provided for it in the annual report. So you can think about these tests. You got the 10% of the top line of the income statement, the revenue, basically 10% of the bottom line, profit or loss on the income statement. Now we're looking at the balance sheet, 10% of asset tests. If these segments' assets are 10% or more of the total assets of all operating segments, then the segment is separately reportable and supplementary disclosures must be provided for it in the annual report. So once again, three 10% tests. You're thinking two income statement, one on the top line revenue tests, one on the bottom line for the net income basically tests, and then you got one on the balance sheet for the 10% of the assets tests. So once you've done those, then we're going to go to the comprehensive disclosure tests. We have the 75% consolidated revenue tests. So it will be applied after determining which segments are reportable under any of the 10% tests. So we're going to do the 10% tests first, and then we're going to say, okay, now we've done our 10% test. We've figured out the separate segments that are required based on those 10% tests. And then if the total external revenue of the separately reportable operating segments is less than 75% of the total consolidated revenue, then management must select and disclose information about additional operating segments until at least 75% of the consolidated revenue is included in reportable segments. So you're going to do the 10% tests. You're going to break out the segments that apply, or one of those rules mean that we have separate reporting. Once done, you're going to take a look at those and say, okay, now we need to have at least 75% that is reported in separate segments. So therefore, if the items that we did the 10% tests are not adding up to the 75% rule, then management must select and disclose information about additional operating segments until they get to that basically 75% rule. So that's kind of like the floor rule, the baseline, the bottom line rule. So comprehensive disclosure test, other items. 10 is generally used as an approximate upper limit on the number of reportable segments. So you're thinking about these reportable segments now. So we're breaking out these reportable segments using the 10% rule and whatnot, and then the 75% rule. And then you're saying, well, how many, reportable segments are there typically? Because the goal of this is to give relevant information. And you would think that if the reportable segments go beyond a certain number, which we're arbitrarily picking as 10, it would no longer be providing relevant information. It would be maybe too much information at that point. So then we're thinking now 10 is usually used as an approximate upper limit. So it's going to be an approximate upper limit. If a company has more than 10, they may consider aggregating segments that are most closely related. So if it goes past 10, you're going to say, okay, maybe this more detailed information is not providing more useful information, but it's just getting more muddying the water with too much information. Maybe we can take the segments that are related to each other and combine those or aggregate those segments together. Comprehensive disclosure test, other items. Judgment in segment determination. Companies will separately report segments that have been reported in prior years but fail the current period's significance tests because of unusual happenings. So in other words, if you say that we had separately reported this segment in the prior year, then for comparability's sake, you would think you would kind of want it to be reported this year. But if it doesn't meet the 10% tests, you might say, well, I shouldn't report it this year. But if the reason it doesn't meet the 10% test is something unusual happened that year, it was just a weird year for the business for whatever reason, then you would think that you would want to be on the consistency principle and still report it separately as a separate segment, so that it'll be consistent with the prior period. And you would think going forward, then it may then still be a separate segment and qualify under the 10% rule for the next year. Companies do not need to separately report a segment that has met a 10% test on a one-time basis only because of unusual circumstances. So on the other side of things, we might say, okay, we've never reported this segment before separately, and it met a 10% test, maybe just barely or whatever this year. But that was kind of a fluke because some weird thing happened this year, which we don't expect to happen next year. So in that case, again, you're kind of leaning on the consistency principle, saying, well, yeah, it met the 10% test, but we don't think it's going to add, the value to it because it met the 10% test on a one-time stance, and it's an unusual stance. So maybe in that case, even though it meets the 10% test, you may not include it as a separate segment in that case. If a segment becomes reportable in the current period that was not reported separately in earlier periods, the prior year's comparative segment disclosures, which are included in the current year's annual report, need to be restated to achieve a comparability of financial data. In other words, if you say, okay, now we had no separate reporting. We have separate reporting this year because it met the 10% test and we think it's legitimate. It's going to go forward and it's not like a fluke thing. So we think we should add it, and it wasn't there last year. So it wasn't there last year. Then you would like to, within the reporting, if you're reporting the financials together, include it in the prior year too, so that you have the comparability between the two. Information to be disclosed for every segment that is determined to be separately reportable includes. So we've determined that they should be separately reportable. Now, what information do we need? We have the segment assets, we have the general information, we have amounts for each separately reportable segment, and measurements of segment profit or loss, and the reconciliations to the consolidated total.